Eleni, do you want to just speak a little bit about the trends in cloud and what's coming up?
Yeah, it's been a real year for talking about cloud and trading, I have to say. End of last year was when Nasdaq and CME announced their partnerships, both with AWS and with Google respectively. And you know, a lot of talk from the community about what that actually means for the physical infrastructure and what the shifts are going to be, because obviously there were no clear timelines in terms of which pieces of infrastructure would move when. But we all know that, you know, trading infrastructure has really bespoke requirements. I don't need to go into all the details, but a hardware perspective, you know, this isn't run-of-the-mill kit that's there. There are really high demands in terms of latency, in terms of availability, etc., and throughput. So this isn't a bespoke deployment that really suits a, you know, virtualized world. That's challenged in the cloud environment, and the network element, particularly for financial markets, is a real issue in the cloud. So the key thing that is currently preventing the matching engines moving, the matching engines, I should say, of the main asset classes moving into the clouds is deterministic networking. And that's what all of the market participants rely on, understanding the determinism of their network to ensure their trading strategies operate as they are intended to. So in virtual networking, you can't achieve that. And so what we're seeing, and what you'll see if you dig into some of the announcements that Nasdaq has made, is that actually right now, cloud is coming into colo. And that's the interesting point. So the ecosystem that lives in colocation is being joined by cloud virtualized environments that the matching engines are leveraging. But it is true to say that, you know, outside the matching and the pure trade functionality, when you move into the middle and back office, there are workloads that are suited to virtualization, and we're seeing different parts of the value chain that are moving up into the public clouds. And that creates challenges for all the players, both the exchanges, buy side, sell side, and the post trade as well, because there's a need then to reintegrate these fragmented value chains. So both your own in-house chain of workloads that is fragmenting across cloud, on-premise, and in colocation, but also when you think about your partners as well, you know, how you're reaching partners that might have deployed hosted solutions elsewhere. So that's one of the key things that Equinix is solving for in the industry. We've launched digital edge services to for a number of years now to fix that for the markets, and so things like the Equinix Fabric are reintegrating these hybrid cloud environments for the industry, and the volume of connectivity that's happening across that platform into the public cloud ecosystem from the Equinix ecosystem and vice versa is really significantly growing in the last kind of 2-3 years.
Jeff, I know we spoke about this a bit before. We talked about build versus buy, I think, in a previous webinar. What's your view around hybrid and how that's going to evolve?
Yeah, I think the story has yet to be written about you know, how this is going to play out with the exchanges announcing these partnerships with cloud providers, and you know, as Eleni touched on, whether I think the middle and back office certainly is embraced and found application in virtual services, especially the public cloud. But I think it's yet to be seen whether the more performance sensitive front office applications are going to move in. And certainly on the exchange side, you know, CME and Nasdaq, I think they announced 10-year plans for a full rollout of these new offerings. I mean, look at the last 2 years. As we know, a lot can change in that a decade. So I think, you know, it still remains to be seen if that's actually going to play out as written and what it's going to look like on the back end. My expectation is exactly as Eleni said. You're going to have an end state where, you know, you do have this hybrid approach. What can be put in the public cloud will be, but there's limitations, and it's going to be a big lift for the public cloud providers to address those limitations. You know, the rest of the financial markets industry has had 2 decades to work through and solve these problems. You know, they don't have Amazon and Google money, but you know, it's a unique engineering challenge. So I think, you know, there's a lot of work to do for the public cloud providers to address that. And then even if it is addressed, you know, the cloud is built for resiliency. That's what it's known for, and certainly that is a big selling point. But even with that being said, if you look at AWS, last year they had a 5-hour long outage. And you can imagine the impact on financial markets if a major exchange goes down for 5 hours because there's an outage with the cloud provider. So, yeah, I mean, the whole industry has always been risk adverse and making sure that you have multiple irons in the fire right now. I see that playing out in the cloud strategy too. Public cloud certainly will have a role. but I think people are still going to hedge, because the industry is full of hedgers, and approach that hybrid approach and have some offering, including, making use of, as Eleni mentioned, the Equinix digital services like Equinix Metal and things like that. I think the upshot, though, is that if you're looking to partner with an MSP or with Equinix, no matter which way things go, no matter which way you want to go for your business, there's offerings to help you out with both, right? Whether it's public cloud connectivity through ECX and similar offerings, or private cloud connectivity such as Equinix Metal.
And what about the second point around data? The report says that improving data management is a key part of improving everything, whether it's risk management or your day-to-day operations. So when you think about data, what are your kind of key points around that, Jeff?
Yeah, we touched on this a bit briefly. Data volumes are growing. We need to have sufficient capacity. It's not just sufficient capacity within the data center where the data originates. You need sufficient capacity to bring that data wherever you need it. And as I mentioned earlier, there's very precise engineering that needs to take place to make sure that the data is resilient, or the connectivity that takes the data is resilient, and you don't experience any data loss. Another trend that we're seeing is you have the emergence of new asset classes. So emergence of crypto means there are a number of new venues popping up. These are new places that you need to connect, new places where you need to place infrastructure, and an increasing amount of data that you need to bring back to your central ticker points. So you need to be agile again in order to connect quickly. These new markets evolve. First in usually has an advantage. So agility and ability to move into new markets quickly is paramount for that. And that's, as evidence of that, that's one of the reasons, Helen, you mentioned earlier, TNS, we just finished an expansion throughout all the tier 1 financial centers in APAC. We just brought online new sites in Europe, in Madrid and Johannesburg, with the idea in mind that you need to be able to react anywhere around the world where these opportunities pop up, move quickly to connect to them, but also have the ability to bring that data anywhere where it's required, which, from TNS perspective, we can take that raw data anywhere on our backbone.
Absolutely, and I know crypto is certainly a very high volatile, market, and low latency is extremely important in that field, just as it is in FX trading, for example. Eleni, how about you? I mean, obviously, this is a challenge that you face on a day-to-day basis as well.
Yeah, I think the markets, we know there's an insatiable demand for data. It's coming in all sorts of new forms, different levels of granularity, different types of specialization data. And our role at Equinix, as we see it, is just to democratize the access into whatever our customers need. That's what we've done from the outset. So obviously we encourage the originators of the data to make it available at Equinix. They typically want to do that. They understand that the ecosystem is there, and that's the most efficient way for their customers to absorb that data. So we work hard with the new sources. We try to keep an eye on the future. But then, of course, that data needs to be disseminated. So we work with partners such as TNS to make sure that that any endpoints can be reached. So we talk a lot with our customers about what data do you need, but where do you need it? And again, we've talked about cloud previously. Do you need that data in colo? Do you need it in cloud? Do you need it on-prem? Regional access, resilient access to data. These are the key things across the stack. Is like resilient access to everything that you need, and data is the fuel, right? So yeah, so huge focus there, and I don't think we're going to see it going away. I just think that the challenge that our customers have is how to manage the volumes that are coming, both on the network capacity, but also the other layers, compute and storage is going to be the volume of data that needs to be kept, and the volume of incoming data is only growing. So so how do you manage that? How do you manage that kind of growth of your entire platform? It's a real challenge.